Hello everyone, this is Satish Kumar. So I have come with another lesson for Indian economy. This is my third lesson. If you haven't watched my previous two lessons, kindly go and watch, so there will be some continuity. You can watch this also as a separate one, but uh, reading those two lessons will be helpful. Okay. So now in this lesson we are going to learn about the national income, and this topic seems to be a little larger one. As I wanted my video to be shorter, I will give it in parts. I will give it in at least two parts or three parts as per content. Okay. So why we need a measurement of economic growth? In fact, the measurement every country is doing this measurement of economic growth, and there are some need for it. In fact, it helps us in multiple ways. We need to know what are the way it will help. So first and foremost thing, it enables to set goals accordingly. So we know where India is growing. For example, at present India is saying the economy is slowing down. We can identify whether we are growing faster, whether we are growing slower. If we are growing slower, we could set goals so that we could go faster, right? These kind of things could be enabled by measuring the national income. So last quarter we came to know that India was growing at less than 4.8%, and due to the pandemic now India is said to be growing in fact witness minus 23.9%, that is negative growth. Okay, so this will enable us to set that India has to grow in future. We will have some kind of goals. So that is why we measure economic growth. Then there is also this to prevent inflation or deflation. So by measuring national economic growth, we know what is since we get quantitative data, we will know where the inflation stands, we will know where the deflation stands. This will enable to prevent that thing. Okay, and we also, by the economic growth, we will, if you have read my last lesson, no, you will find that there are different sectors in the economy, and the agriculture sector, agriculture sector, industrial sector, and service sector. So we will find which are the sector are contributing how much towards the economic growth. So based on that, we may balance the contributions of different sectors of economy. Okay, say in India, as I said earlier in the previous lesson, agriculture sector contributes less than 20%, but the nearly 50% of the people are dependent on agriculture. Uh, there are a lot of suicides in agriculture sector. So that sector, since lot of people are dependent on towards it, but the contribution of that sector is very less, that sector may need some care from the government. So the government may work towards taking care of agriculture sector. Okay, so if the industry is not growing faster, and industry is improvement is must for a country, India could spend more investment, in the government could spend more investment to promote the industrial sector. So these kind of things could be done when we know clearly what is the contribution of each sector towards the growth of an economy. Okay, also uh, measuring economic growth helps in the forecast tax revenues. Okay, for example, we know how the economy is growing and what will be the tax income, and based on this we can forecast that in future there will be this much amount of tax, and based on that we could set budgets. Budgets are set based on estimates. Okay, when we forecast this much of amount tax revenue will come, we will plan accordingly. Okay, and uh, not only for government these are all useful, it could also be useful for businesses. So the businesses know how the economy is growing and what will be the economy in future, it will, how it will grow based on the previous trends. Okay, so the business will also plan investment. Okay, whether to invest more. In fact, based on the growth, it will show which sector is growing. so the industry will invest accordingly, so that it will also be useful for business people or corporate people. Okay. Also, measuring economic growth will show what is the real condition of the economy in socially, that is what is the inequality in society. For example, when the economy is growing faster but still there are large number of people are in poverty, when the quantitative data are available, it will help to understand what is the inequality in society, and it will also help to reduce those kind of inequality by planning for inclusive growth, so that all the people in the economy benefit from the economic growth. Okay, so these are all some of the benefits or uses of measurement of economic growth. So you need to know some idea, this kind of a few points, what are the uses of measuring a national income. So see, the idea for calculating a national income first came in the 1930s by Simon Kuznets during the Depression time in USA, when he said that when we measure a national income, we know where we are and we can plan accordingly, and this helped USA to end US the depression because of the data availability later when they calculated. Okay, although uh, Kuznets was not the first economist to try this work. In fact, in India in the 1868 itself, one person called Dadabhai Naoroji has tried to calculate the national income of India. So it was not Simon Kuznets who first gave the idea of calculating the national income. But what makes Simon Kuznets very important is he he was able to give a comprehensive and meticulous in his standard and set a standard in this field to how to calculate. So it was very comprehensive, very clear, lot of statistics and other things, how to arrive at it. It was a very detailed study how to calculate the national income. That is why he is credited. Okay, so don't ask me that after reading something about there have been previously national income account estimates. Yes, there were previously national income account estimates. I'll give you that also. But why Simon Kuznets is credited is his method was highly comprehensive. It gives a clear picture about national income. Okay. Okay. So as I said earlier, we'll see about India. As I said earlier, in 1868 itself, India's one of the freedom fighter, Dadabhai Naoroji, a moderate. If you have seen my modern India lessons, you will know about Dadabhai Naoroji, one of the earliest uh, nationalist of India who fought against British. He, in his book, in fact, this is a very important point. He wrote a book called Poverty and Un-British Rule of India, and this kind of questions are regularly asked. Who wrote this book, Poverty and Un-British Rule in India? It is written by Dadabhai Naoroji, in which he tried to estimate the Indian per capita annual income, which at that time he felt it was just 20 rupees. Okay, in fact, he made this major contribution he attempted to calculate Indian national at a basic level. Okay, in fact, his main intention was to show the British are trying to exploit India. That is why, in fact, India's poverty is because of the British rule. That is what he wrote in this book, Poverty and Un-British Rule of India. Because the British are ruling un-British in India, they are creating poverty. Okay, look at the way how he put the British rule. He is not saying that poverty is because of British rule. He is saying poverty because of un-British rule. That he means is British are not acting. British are considered to be a gentleman. So British are not acting as gentlemen in India. That is why India is facing poverty. Because he went to London and he spoke to regarding India in the British London Parliament and so, and he became actually one of the member of London House, okay, Parliament. So such is the greatness of this man. So he wrote this book. Okay, and after independence, no, the government of India appointed National Income Committee in August 1949 under the chairmanship of Professor P.C. Mahalanobis, and for compilation of national income. Okay, so only after 1949 India started very formally. Okay, and for this purpose, for the estimation of national income, the government established Central Statistical Organization, which along with the National Sample Survey Organization published it for a long time till recently. Okay, very recently we merged both the Central Statistical Organization and National Sample Survey Organization into a one body known as National Statistical Organization. In fact, at present, this is the organization which is entrusted with the task of calculating national income, that is National Statistical Organization. Please remember this point. Okay, previously it was Central Statistical Organization along with NSSO. Now both the CSO and NSSO has been merged into a single organization, National Statistical Organization. Very important point. Okay. Sorry, I have not moved the slide. I have been giving my lesson based on my slide. Okay, please, all the points are here. I am doing this repeatedly. So India in 1869, Dadabhai Naoroji first attempted for calculating a national income in his book Poverty and British Rule of India. Then after independence, India appointed a National Income Committee in 1949. For this purpose, they created CSO and NSSO, which published it till recently. Now we have merged CSO and NSSO into NSSO. National Stat. We have merged CSO and NSSO into NSO, National Statistics Organization, and this is the organization entrusted with the task of estimating national income. Okay. So national income. So national income is measured in 4 ways. Okay, there are 4 types, the 4 ways to calculate national income, and all 4 are useful. Okay, we will see one by one. There are, first is gross domestic product, then there is gross national product, then there is net domestic product, then there is net national product. All has its own uses. Otherwise, we won't be calculating 4 different types of measures. Okay, for a national income, because each one contributes towards some work. We will see everything in detail, and each one of them are different from other in some way. Okay, as I said, it was national income is measured by NSO. This NSO is under the Ministry of Statistics and Program Implementation. A very important point. These kind of questions could be asked in prelims. Which body is entrusted with measuring national income, and NSO is under which ministry? This kind of questions will be asked in prelims, which will be very useful for you. Now we will see the first measure, that is gross domestic product. Okay, the basic definition is, it is the value of all final goods and services produced within boundary of a country. This definition is very important. If you see this definition, you will find certain words. First is all final. It means it doesn't say all goods and services produced within the country. It says all final goods and services. Why it says particularly mentions final? Because in a country, lot of goods are produced, but some goods are considered as intermediate goods, and some goods are considered as final goods. For example, if you are buying a car, car is a final good you are going to use, but there is also a tire for the car, which will be produced by some company. But tire on its own is not a final good. Tire will be bought by a car manufacturing company, which uses it as a raw material for in the car building. The car is the final product. So while calculating gross domestic product, the gross domestic product only includes the car not the tire. Okay, that is why we mean all final goods, only final goods and services. For all, there is I just given one example. There are a lot of examples like this, and no intermediary goods will be valued. Okay. Okay. Also note that it includes income of foreigners intra-country. See, when we calculate a gross domestic product, it is everything that is produced in our country, in the border of India. Sometimes some foreigners might be working here in India. He will be earn some income. His income is also included in the gross domestic. So some foreigners may start an industry in India. They may producing something that is also included in the gross domestic product. Okay, but that income eventually would go from India, but still we calculate it in the gross domestic product. Please note this point, because this is the difference between gross national product and gross domestic product. When I discuss gross national product, I will link both these things, and I will also give differences between GDP and GNP. Okay. See, next point is, in estimating, see, GDP can be both real and nominal. This is very important. What do you mean by GDP can be real or nominal? This kind of thing could be asked in prelims question. You need to know. See, nominal GDP means current year of production of goods and services value at current prices. Okay, so if today India produces something, it is produce some goods, it will be valued. For example, 10 products are produced in India. Okay, car, bicycle, like that. All these 10 products has some value today, and based on this value, the gross domestic product is valued. Okay, the total production of the country is valued. That is in nominal GDP. But in real GDP, current year of production of goods and services are valued at a base year prices, so that the inflation of the price is seen, so that the growth will be exact growth. I will give you an example. See, 2000 today is 2020. Yes, last year is 2019. Between last year and today, India might have had some 6% or 4% of inflation. Okay, because of this 6% or 4% of inflation, the prices of different products might have rise. Okay, inflation means price rise. Inflation will affect the rise of price in the products. So since this price rise affects the value of the total goods, no, we want to know the real GDP. Okay, so that the inflationary price will be reduced. That is why we will have a base year. For example, if you have the base year as 2019, we will know 4% increase, that will be deduced. The 4% price of the current year production of goods and services will be reduced to arrive at a real GDP. So we have a base year. At present, India have a base year as 2017 and 18. Okay, previously it was 2011 to 12, and then like that it was been before that it was 2003 and 4. Okay, now it is 2017 and 18. Please remember this point. The base year at present is 2017 and 18. It was recently fixed. Okay, so based on that, the real GDP of today's current prices will be based on the 2017 price. Okay, for this purpose we use what is known as GDP price deflator. Okay, the formula for it is nominal GDP, that is the current year production of goods and services valued at current prices, divided by the real GDP, that is the base year price GDP, into 100. Okay, which will help to arrive at the real GDP. Okay. So now we'll see what are the uses of GDP. See, GDP shows the percentage change in the growth rate of an economy, so that we will know where India is growing, how India is growing. So as I said earlier, 3-4 months back, when the latest in the January month or something like that, no, when the first data came, it showed that this year India was growing at 4.8% like that. It means India is growing. In fact, for the past 1 year and a half, India is going towards a slowdown. India was previously used to grow at 8-9% and all. Now it is slowly come to 4.85% like that. Due to coronavirus, it has gone even further down. At present, India is in the depression stage, and it is picking up after the coronavirus. We need to know only after the next data comes. We will know what is the true picture only after the next data comes. Okay. Okay, so this helps to know where India is growing, and this will also help to plan accordingly. Okay, and it is also, GDP is a quantitative concept because it gives in terms of quantity. Okay, so most important thing here is it is used by International Monetary Fund and World Bank in the comparative analysis of its member nation. That is a very important thing. The different countries, no, different world institutions use to compare nations by using the GDP. That is a very important thing. Please remember these kind of points. Then we'll have gross national product. So the gross national product refers to the total output or production of final goods and services produced by the nationals of a country. This is a very important point, as I said earlier, during a given period of time. So while calculating GDP, we included anything that is produced in the boundary of a country, even if it is a foreigner. But here, when we calculate gross national product, we will only consider what is produced by Indians, and we will also include some of the Indians who might have went outside, like foreign countries, Dubai or America. They will also produce something there. They will send those money to India. No, those things are also included in the gross national product. So we reduce foreigners who are come and produced in India amount, and we include all those amount that is produced by Indians outside. So this is basically gross national product is about what is the Indians produce in a year. Okay. So that is what here in the calculation of GNP we include money value of goods and services produced by national outside the country and deduct income received by foreign nationals within the boundary of country. So that we will arrive at a GDP. The formula is GNP equals to GDP plus net factor income abroad. So net factor income abroad formula will be factor income received from abroad minus factor income paid to abroad. Okay. So what are all the items that will be we consider in the factor income? This income from abroad, no, for both Indians and foreigners. First is private remittances. Okay, so some people who are working in India, no, they will send the money to the foreign. Those amount will be deducted. Similarly, lot of Indians who are working in the foreign countries, no, those they will send money to India. These things are added. Okay, the private remittances. Okay, see, generally for India this is favorable. That is, the amount that is going from India is less than the amount that is coming to India. So there are large amount of money are coming from outside towards India because we have large number of Indians working abroad, like Malaysia, Singapore, Dubai, Saudi, US, France. Indians are working all over the world. Okay, so they are all sending India. As a result, India has a positive inflow in this case. Okay, then second is interest on external loan. So India is actually one of the uh, uh, large India receive large amount of loans from externally, like India get loan from World Bank, IMF, or some other country like that. India gets loans. Okay. Similarly, India also give loans to some countries, but generally India's receiving loan is higher than the India providing loan to others. So in this case, India is negative. As a result, this is a very important point. As a result of this second point, no, India is paying a lot of interest, and India is losing in this net factor of income abroad. You will see even though by private remittances, lot of Indians working abroad are sending money to India. No, in that case we are having a favorability, but in this case we are having a negative, and this is a huge sum, and for this we are paying a large number of interest. No, as a result we are in the negative side. Okay, please remember this point. Then there is also external grant, the net grant that India receives from foreign countries. Similarly, the next grant that India gives to foreign countries. Okay, here also generally India receive lot of grants from developed countries. For a long time, India was the largest receiver of grant from other countries. But in recent times, India is also offering more grants to other countries, as India is now playing a major role in the world. Okay, so in recent times, India is also playing to Africa, other countries in Asia, some other countries. India is even granting to Russia. Okay, so to be seen as India is playing a major role in the world politics. Okay, so India is also becoming India's economy is also growing faster. So now we are also doing that, but still India received more grants than it gives. Okay, so based on these three, the net income factor income from abroad is generally unfavorable to India. That is, the money that comes to India is lesser than the money that goes outside India. That is why uh, India's gross national product will always be lower than its GDP. Please remember this point. India's gross national product will always be lower than GDP. These kind of questions could be asked. Okay. India's gross national product is always lower. I have given all those details. The balance of all these three components of income from abroad segment may be turned positive or negative. In India's case, it has always been negative because there is heavy outflow on fund on because of trade deficit and interest payments on foreign loans. Okay, this means that India's gross national product so far always lower than its GDP. Sometimes it may change in the future, but at present India's GNP or gross national product is lower than the GDP. Please remember this point. Now we'll see the uses of GNP. Okay, see, India's national income measured by IMF by this method, India is considered as the 7th largest economy in the world. Okay, based on this. But in terms of purchasing power parity, India is ranked as the 3rd largest economy in the world. Okay, say by national income, India is ranked as the 7th largest economy, the total income. But by purchasing power parity, that is, see, Indian rupee and American dollar may have value based on face value. If India today $1 of US today may value 70 rupees on face value, but if you take 1 rupee and buy a product, no, you may buy 4 products. If if you take the sorry, if you take $1 and if you could purchase certain things, no, you may buy some products. If you take India's 70 rupees and you buy certain things, it may buy even, for example, I am saying in this case, the $1 purchases 4 bananas, okay, but India's 70 rupees, which is equivalent to American dollar, if it is purchases 6 bananas, means India will have a higher purchasing power parity, okay. Even though the face value is different, the exchange value is different, but based on the purchasing power parity, India's value is higher. That is why India's rank is third largest economy in the world, because Indian rupee has a higher purchasing power parity. I hope you understand what I am trying to say here, okay. India is only third after China and USA. So GNP is a quantitative and qualitative aspects of economy, and hence it is considered as a better concept of national income than GDP, okay. But generally GDP is considered as a better measure by many thing for national income. That is why that is used by World Bank and IMF, okay. So then it enables us to learn about several facts about the economy, similar points like how much outside world is dependent, because we are considering all the net income, factor income and other things, no. So it gives some other factors like how much the outside world is dependent on its product and how much it depends on the world, what is the standard of its human relation, what position it hold regarding financial support from and to the world. As I said earlier, previously we are getting more loans from outside, now we are also lending. Previously we are getting more grants from outside, now we are also granting to other countries. So these all will be these data will be available in the gross national product. So finally I will give a brief description about what is the differences between GDP and GNP comparison, and we will see the net domestic product and national product in the next lesson, okay. So GDP versus GNP. So basically GDP, it is a geography related concept, that is anything in India it is, but GNP is a citizen relation related. Just I am giving the point based on what we have discussed so far, okay. So GDP focuses on where goods are produced, GNP who produce. So if a country has many of industries functioning overseas, naturally its gross national product will be greater than its GDP, okay. For some developed countries, no, their country have more number of its industries outside their country. As a result, those countries GDP will be lesser, but their gross national product will be higher, okay. But in a closed economy, the GDP and GNP will be almost equal, but in reality there will be a slight increase in GDP. In a closed economy, the GDP will be slightly higher than the GNP, because some people will be working outside and giving money, even though the economy is not closed, okay. At present, India's GDP is less than its GNP. We have already seen that. Why? Because India's foreign direct investment is more than the foreign direct investment by India in abroad, okay. Say, as I said earlier, GDP is considered as a better measure by experts because it provides a much larger picture. For example, it will create employment in a country, even though the income is not going to that sector, that industry income is going to be finally going outside, but still it creates employment and other activities. So for a whole lot of reasons, I am not going into very detail about economy. Generally the experts believe that GDP is a better measure than GNP because it provides a more accurate picture of a particular national total economic activity, and it is a better indicator of an economic's health. That is the reason World Bank and IMF use GDP while calculating, while comparing different nations. Okay, please remember this point. And with this, I'll end this lesson. We will see the net domestic product and other in the next lesson. Okay, I don't want the lesson to be too larger.